All right, so another deep dive today. And today we're going to be looking at Opendoor,
Hmm?
and specifically their recent 10Q filing,
Okay.
which they put out for the quarter ending September 30th, 2024.
Right.
Now, a 10Q, it's kind of like a quarterly checkup.
Yes.
For publicly traded companies, it gives us a peek
Yeah.
under the hood to see, how are they doing?
Yeah.
How's their financial health?
Yep.
Now, I know you're probably curious about Opendoor,
I am very much so.
especially with this real estate market we're in.
Oh, yeah.
I mean, it's been a wild ride with these interest rates.
Oh, my goodness.
Up and down, just a roller coaster.
Bouncing around like crazy.
And then the economy, throwing all these
It's
curveballs.
a lot of uncertainty.
So how is Opendoor navigating all of this?
Well, it's a fascinating case study.
Yeah.
Opendoor's whole mission is to make buying and selling homes
Right?
simpler and easier. Power life's progress, one move at a time. That's how they put it.
I love that.
And they're really a massive iBuyer. I mean, that's their core business.
Right, buying homes directly from sellers.
Yep, sprucing them up, putting them back on the market.
It's a pretty bold model.
It is, and they've been busy.
Yeah. How much have they expanded?
Well, they're now in 50 markets,
Wow.
and they've handled over 269,000 transactions to date.
That's a lot of homes.
It is, but like you said, it hasn't been a great year for real estate.
No, not at all.
Mortgage rates, oh man, they've been all over the place.
I know.
Like down to 6.1% and then back up again.
Yeah, it's tough for buyers.
Really tough. And then the economy, just adds another layer of uncertainty.
Absolutely, and it's definitely impacted home sales.
It has. We're looking at under 4 million annualized sales right now,
Wow, that's
compared to the 5 million average over the last decade.
a big drop.
It is. And for a company like Opendoor,
Yeah,
fewer homeowners selling. That means fewer homes for them to buy and resell.
right, puts a squeeze on their inventory. So how's all this affecting Opendoor's bottom line?
Well, let's look.
Let's start with revenue.
Okay, revenue.
Their 10Q shows a 41% year-over-year increase
For the quarter.
for the quarter, yeah, and that's driven by higher sales volume.
Right, 3,615 homes sold compared to 2,687 the same time last year.
So that sounds pretty good, right?
On the surface, yes.
Yeah.
But if you zoom out and look at the first 9 months of 2024,
Okay.
their revenue is actually down 33% year over year.
Oh, wow, so it's a bit of a mixed bag.
It is, and it's because Opendoor slowed down their home buying.
Right, they pumped the brakes
Yeah, in late 2022 and early 2023.
because of the market.
Exactly. They didn't want to get caught in that downturn.
That's a smart move.
Yeah, but they have started rebuilding their inventory since then,
Okay.
which explains the recent bump in revenue for the quarter.
Interesting. So higher revenue recently, but down for the year so far?
Yeah, it's complicated.
It is. What about their profitability?
Okay, profitability.
So the 10Q mentions gross profit and gross margins. Can you kind of break those down for us?
Sure, so gross profit is the revenue they make,
Mm-hmm.
minus the cost of doing business, which for Opendoor
Yeah,
is primarily the cost of buying and fixing up the homes.
got it.
And then gross margin, that's just the gross profit expressed as a percentage of revenue.
Okay.
Both of them are key indicators of how efficiently a company's turning sales into actual profit.
So are they doing all right in that regard?
Well, their gross margin for the quarter actually shrank
Oh,
from 9.8% to 7.6%.
okay. That's not great.
No, it's not. And the main reason is lower spreads.
Spreads.
Yeah, the difference between the price they buy a home for and the price they sell it for.
Right. So a smaller spread means less profit.
Exactly.
But their gross margin for the first 9 months of the year is actually up.
It is, from 6.8% to 8.6%.
Wait, hold on. How does that work?
Well, remember how they slowed down on buying homes?
Right.
During that time, they were really careful with their acquisitions.
Okay.
They aimed for higher profit margins.
To kind of offset potential losses.
Exactly.
Interesting.
So they were playing it safe.
Okay, so higher revenue in the recent quarter, but shrinking margins.
Yeah.
What about their overall net loss?
Well, they're still operating at a loss, which isn't surprising considering the market.
Right.
But the good news is their loss narrowed for the quarter compared to last year.
Okay, so some positive signs there.
Yeah, there are some bright spots.
Now, Opendoor's business model is all about buying, holding, and then reselling homes.
Right.
So their inventory and how they finance it, that's got to be crucial.
It's absolutely key. And their 10Q shows their inventory has increased significantly.
Okay, how much are we talking?
They have 6,288 homes at the end of the quarter,
Wow.
compared to 4,007 a year ago.
That's a lot of houses.
It is a lot of capital tied up in those homes.
Yeah, and speaking of capital, their financing strategy caught my eye.
What did you notice?
Well, they rely heavily on what's called non-recourse asset-backed debt.
Right, that's a mouthful.
It is. Can you explain that in simple terms?
Sure, think of it like a car loan.
Okay.
You buy a car, the car itself is the collateral for the loan.
Right.
If you can't pay back the loan, the lender takes the car.
Makes sense.
So with Opendoor, the homes they buy, those are the collateral for their loans.
I see.
If things go south, lenders can seize the homes, but Opendoor isn't personally on the hook for the debt.
So it's a way to minimize their risk.
Exactly, especially in a volatile market like this.
But it also means their business is very capital intensive.
Very much so. They currently have $2.1 billion in outstanding asset-backed debt.
Wow. That's a lot.
It is. And another $381 million in convertible senior notes.
That's a mountain of debt.
It is. But I did notice they repurchased some of their 2026 notes last year.
Yeah. What's up with that?
That's an interesting move. It suggests they're actively managing their debt levels,
Okay.
trying to strengthen their financial position, which is a good sign.
So we've got revenue up for the quarter but down for the year.
Mm-hmm.
Margins are shrinking. They're still operating at a loss. And they're carrying a significant amount of debt.
Yeah, that's the picture so far.
But how are they planning to grow with all this uncertainty in the market?
Well, that's the million-dollar question.
Right.
And believe me, they're not just sitting around waiting for things to get better.
They're taking action.
Absolutely. They're pursuing some really interesting growth initiatives.
Okay, well, I'd love to hear about those. But first, a quick word from our sponsor.
One strategy that really stands out is their focus on partnerships. Like they've teamed up with some big names in real estate.
Oh, yeah, like...
Well, you've got Zillow, Redfin,
Wow.
and Poughkeepsie Realty.
Those are huge platforms.
They are. Millions of users already looking to buy or sell homes.
So Opendoor's tapping into that existing audience. That's really smart.
It is. It's all about expanding their reach.
Right, and driving volume.
Exactly. More potential sellers, more homes they can buy and resell, more revenue.
And I bet it increases brand awareness, too.
Oh, absolutely. Being associated with those big names definitely helps.
So partnerships are one prong of their growth strategy.
Right.
What else are they doing?
Well, they're also really focusing on what they call re-engagement.
Re-engagement.
Yeah, remember that massive database we talked about?
Yeah, all those registered sellers.
Exactly, the ones who got offers from Opendoor in the past but haven't sold yet.
It's like a gold mine of potential leads.
It is. And Opendoor is actively reaching out to them.
So they're not just trying to attract new customers.
Right.
They're also going back to the ones who've already expressed interest.
Exactly. Nurturing those relationships, hoping to convert them into actual transactions.
Makes sense. So partnerships, re-engagement. What about new areas of the real estate business?
Well, they are branching out a bit.
Oh, in what way?
They've started offering what they call adjacent services,
Like what?
things like title insurance, escrow services,
Okay.
and even brokerage services.
So they want to be a one-stop shop for all your real estate needs.
It's a smart play.
It is. So they can create a more seamless experience for customers.
Exactly. And it can also boost their unit economics.
Unit economics, now you're just using fancy business jargon on me.
Sorry, but it's a really important concept.
Okay, humor me.
Basically, it means the profitability of each individual transaction.
Okay, so like if you're selling lemonade,
Exactly.
your unit economics would be how much profit you make on each cup you sell.
Perfect analogy.
So Opendoor wants to squeeze more profit out of each home sale.
Exactly. By offering these extra services, they can do that.
And that could really improve their overall profitability.
It could. It's a way to diversify their revenue streams and make each transaction more lucrative.
So these partnerships and adjacent services sound crucial for their growth.
They are, but there are also some potential downsides.
Oh, like what?
Well, for one thing, those partnerships with companies like Zillow and Redfin,
Yeah.
they're not exclusive.
Meaning,
Those platforms are still working with traditional real estate agents, too.
right, so Opendoor is facing competition.
Exactly. They're not the only game in town.
And what about those adjacent services? Any downsides there?
Well, they have the potential to boost revenue, but they also require significant investment and expertise.
So Opendoor needs to build out those capabilities.
They do, and they need to make sure those services are seamlessly integrated with their core iBuying business.
Sounds complicated.
It is. It's a complex undertaking.
So these growth initiatives, they're not without their challenges.
No, they definitely come with some risks.
Well, we've covered a lot of ground here.
We have.
Opendoor's financial performance, their growth strategies.
What are your key takeaways so far?
Honestly, what strikes me most is how they're trying to manage this market volatility.
Right.
and at the same time position themselves for future growth.
It's a tough balancing act.
It is. It's impressive, actually. It shows they're adaptable and strategic.
It does, but it also raises questions about their long-term viability.
Meaning,
Can they really disrupt the real estate industry?
it's a massive industry, very entrenched.
It is. And will their bet on this simpler, technology-driven experience pay off?
Those are the big questions.
They are, and the answers might depend on things outside of Opendoor's control.
Like what?
Interest rates, the economy, consumer behavior.
It's a fascinating case study. I'm really curious to see how it all plays out.
Me too. And speaking of things playing out,
Yeah.
there's one more piece of the puzzle we need to look at.
Which is?
The potential risks and challenges that could derail Opendoor's plans.
Okay, so let's talk about those risks.
By risks.
We've already touched on their debt.
Right, the mountain of debt.
But what other challenges are out there that could cause problems for Opendoor?
Well, one of the biggest concerns is their business model itself.
How so?
They're basically betting on their ability to predict future home prices.
They need to buy low and sell high to make a profit.
Exactly. And in this volatile market,
Yeah.
that's a tough game.
It is. What if they misjudge the market and overpay for homes?
Then they could be stuck with those homes when prices drop.
And they have thousands of homes in their inventory.
Right, so even a small dip in prices could mean big losses for them.
It's a risky strategy for sure.
It is. What about competition? Are they feeling the heat from other iBuyers?
Or even traditional real estate agents.
Yeah, the iBuying space is getting more crowded.
Is it?
There are other players out there like OfferPad, Redfin now,
Right.
and of course the traditional real estate brokerages. They're not going away.
They have a lot of experience and resources.
You do, so Opendoor's facing a battle on multiple fronts.
What about the broader economy? How could things like rising interest rates affect their business?
That's a big unknown if interest rates keep going up.
Yeah.
You could make mortgages even less affordable,
Right.
which would cool down the housing market even more.
And that means fewer buyers for Opendoor's homes.
Exactly, and if the economy goes into a recession,
Oh, yeah.
people might be less likely to move.
Which would hurt Opendoor's sales volume.
Absolutely.
Oh.
So there are a lot of potential headwinds out there.
There are. Okay, let's shift gears for a minute.
Okay.
Let's pretend we're thinking about selling our home.
All right.
What are the pros and cons of using a service like Opendoor?
Well, one of the biggest pros is convenience.
Oh.
Opendoor offers a quick and easy way to sell your home.
Right. You don't have to deal with listings, showings, negotiations.
Exactly. You get a cash offer, you close on your timeline.
You avoid all that uncertainty of waiting for a buyer.
It can be really appealing for sellers who need to move quickly.
Right. Or just want a simpler process.
Exactly. But there are downsides too.
Like what?
Well, the trade-off for that convenience is usually a lower sale price.
Oh, okay.
Opendoor needs to make a profit, so their offers are typically below market value.
I see.
And they also charge service fees.
So you might end up with less money in your pocket.
You could, so sellers need to weigh those factors carefully.
Convenience versus the potential financial hit.
Exactly. It's a trade-off.
Yeah,
What about
right.
buyers?
Yeah. What are the pros and cons of buying from Opendoor?
Well, one benefit is that the homes are usually move-in ready. Opendoor makes repairs and renovations before listing them.
So you don't have to worry about fixing things up yourself.
Exactly. And the buying process is generally smoother and faster.
Less hassle for buyers, too.
Right. But there's some potential drawbacks. Well, buyers might not have as much negotiating power with Opendoor.
Okay.
And because Opendoor's focused on volume,
Yeah.
they might not be as willing to customize a home for a buyer.
So there are trade-offs to consider for both buyers and sellers.
Absolutely. It really depends on your individual circumstances and priorities.
So whether or not Opendoor is the right choice for you,
It's a personal decision.
we've explored their financials, their growth strategies, the risks and rewards.
We covered a lot of ground.
What's your final verdict on Opendoor? Are they on the path to success or are they headed for trouble?
Honestly, it's too early to say for sure.
It's a tough market.
It is. And they're walking a tightrope. Their success will depend on a lot of things.
Like what?
Can they predict home prices accurately? Can they manage their debt?
Can they beat the competition?
Right. And can they adapt to the changing economy? It's a high-stakes game.
It is a classic tale of disruption.
A company trying to change a huge industry.
And they're facing challenges and opportunities every step of the way.
It's a fascinating story, and we'll definitely be keeping an eye on it.
So for our listeners out there, the key takeaway is stay informed.
Right. Keep an eye on their financial reports, watch their progress with those growth initiatives.
And pay attention to the broader economic trends.
All of that will give you a better sense of where Opendoor is headed.
And don't be afraid to ask those tough questions.
Exactly. Does Opendoor's model make sense for you? How does it compare to the traditional process?
Do your own research, weigh the pros and cons.
Make an informed decision.
We've given you the tools and the information.
Now it's up to you to decide if you want to open the door to Opendoor.
Well, we've had a great time diving deep into Opendoor.
It's been a fascinating discussion.
And we hope you learned a lot from it.
We'll be back soon with another deep dive into a different company or topic.
So until then, keep learning, keep questioning, and keep diving deep.